Jeffrey, congratulations on winning the award, the fund manager of the award from the asset. I know you've been with JP Morgan for 18 years.
Yes.
Yeah, how did you get into JP Morgan?
When I'd been living in London, living and working in London for 5 years, I wanted to experience something different in terms of where I lived. At the time I was managing European equities in London, and I saw a job to manage European equities based in Hong Kong. So I was very fortunate that I could bring my skill set and do essentially the same job, but come live in a completely different part of the world, which is what I wanted to do for a more social, cultural and lifestyle reasons. So I joined what was not then JP Morgan, what was then Jardine Fleming Asset Management, the predecessor firm of JP Morgan Asset Management in this part of the world. So that was in 1997 when I got that job.
Okay, so I guess 1997 means Asia financial crisis.
Absolutely.
That's an interesting, very interesting time to get into Hong Kong. Yeah, well, can you record your experience back in 1997?
Actually, I think there were two fascinating things that happened in 1997. One of which was that I turned up here for my interviews on the weekend of the handover. So my interviews in Hong Kong were on the very first day that Hong Kong had returned to Chinese rule. Obviously, as a British person, that was an interesting time to turn up here. I got the job and I moved here in September. I started work on September the 22nd, 1997. Thailand and some other countries in the region were already in trouble, and Hong Kong started to collapse in early October. And you're right, the next essentially 6 years, with some little bounces along the way, were a very major bear market in Asian equities, which is an interesting learning experience for all of us. And I think made it much easier to understand the global financial crisis when that came along, essentially 10 years later.
So from 2012, the Asian Income Fund has been restructured. How that the change lead to your decision making and your investment?
Sure. The main change when we relaunched the Asia Pacific Income Fund from what was previously called Pacific Balanced, which was an equity and bond portfolio, but it wasn't a fund that had particularly focused on generating high income. And what we noticed at the time was that with interest rates being essentially zero in places like Hong Kong, Taiwan, Singapore, there was a huge demand for yield, for income. US Treasury yields at the time were probably 1.5% to 2%, something like that. So cash yielded nothing, government bonds were yielding next to nothing, there was a demand for yield. And so we reorientated the fund to focus on that. The bonds, we moved to higher yielding bonds, which makes a bit more risk, and we changed the equities dramatically towards a high yield equity portfolio, which interestingly reduced the risk quite a lot. The beta of the portfolio came down dramatically. And at that moment in time, we were able to achieve a yield on both our bonds and equities of about 6%. So when the fund was launched in the middle of 2012, the total portfolio yield was about 6%, the gross yield. And that was something that was very attractive to clients, given the interest rate and government bond yields that were available at the time.
Okay, so your management of the Asian Income Fund or other funds, what are the most memorable experience you've ever had?
I thought about that because when I read your question, because I've never been asked that before, and I think the most memorable experience I had in investment was when I moved here in '97, but I was managing European equities, and in the year 2000, I was offered an opportunity to move into the Asian equity team. And one of the first funds I was asked to run was called Pacific Smaller Companies Fund, and there were two small cap funds that were here. They were tiny. They were $20 million funds. There was very little interest in Asian equities at the time. We were still in effectively the Asian crisis, or the hangover of the Asian crisis. And I started running around Hong Kong meeting some small cap companies, and I couldn't believe how cheap they were. I mean, I met companies that were trading on 2 times PE earnings in 2000. They were growing, they had 10% dividend yields, they were on 0.25 of book value, which is very, very cheap if they're ever going to if they make money. There's a company that now, I met Tektronix, which is now quite a large, well-known company in Hong Kong. Its market cap at the time was $1 billion Hong Kong dollars. It's about somewhere between 100 and 200 million US dollars. It's now 50 billion Hong Kong dollars, over 6 billion US dollars. It was on 5 times PE with lots of cash on the balance sheet. You know, the value was phenomenal because Asia had been forgotten about by investors because of the crisis. They were tiny, which meant they were uninvestable for a lot of people. But that was, I think, my most memorable investment experience, and it's a very clear example that markets are not efficient.